Darryl White is the CEO of Bank of Montreal, and he's with us now. Darryl, thank you so much for being with us. And I guess the place I want to start is, in the midst of all of this, as we hear, Canada is facing a debt downgrade by Fitch. We worry about provincial levels. We worry about government capacity. In some ways, you've been a partner to governments in delivering the aid that they've put in place. Does the debt downgrade worry you at all? Where's that on your radar?
Yeah, it doesn't worry us particularly, Amanda. We'll have to see how markets react. But I think when you consider a credit rating, whether it's a company or it's a country or it's a province, what you're considering is access to capital and cost to capital. And so the government of Canada will still have a AAA credit rating by other agencies. I think one of only 2 G7 countries that can say that. And there's plenty of access to capital. And the cost of capital relative to other countries and relative to history is very, very low. So I don't think it will be a very significant development, but obviously it's one we'll watch carefully.
Give me a sense of where you think your business is. And I say that obviously where your business is will be a reflection of where many other businesses are in terms of where we are through this pandemic. You've set aside loan losses. We know that's a reflection of risk management. Where do you think we're at, Darryl?
Yeah, I think it's still, on that question, Amanda, it's actually early innings, believe it or not, given so much that's happened over the last 3 months. But if you think about where we are to now, we're literally today, I'm standing in downtown Toronto, we're in the middle of a reopening. That's one thing. But as we move into the fall and we think about a second wave, and then we think about the performance of economies over the course of the next year and a half, here's what I tell you. I think we're going to round trip to zero, but it'll take us until the end of 2021 to do that. So, for example, we could see 5-6% contraction over the course of the full year in Canada and the U.S., by the way, over the course of 2020. But we'll see that same 5-6% rebound by the end of 21. So what that really means is you've spent 2 years getting back to where you started, and you've left 4 or 5% of cumulative GDP on the table. That's not a great thing. And at that point in time, it's pretty clear to us that we'll have higher unemployment then, a little bit higher, not a lot higher, a little bit higher than we did pre-COVID. So the implications of this will be long lasting. And between now and then, as we all know, it'll be choppy and it'll be uneven.
And we are hearing some pretty dire predictions. We've heard from retailers, restaurateurs, that many will just go out of business, that's kind of inevitable. We've staved it off for the meantime, but it's going to happen. And that beyond that, without government support, there will be much more damage. How do you factor in those unknown unknowns, just in terms of how bad the damage is on the other side of this and the kind of lag effect we see with a lot of bankruptcies?
Yeah, well, as I said, it'll be quite uneven because if you look at, you've got over 700,000 recipients in Canada of the CEBA. So at the very low end of the business size, you've got quite a bit of protection there. As you get up into the small business, there is a lot more risk, as you pointed out. But then when you get to larger businesses, there's lots of access to capital. So I think there'll be quite a disparity between size and quality of business. And then, of course, as you look at sectors, on the one hand, you talked just a moment ago about effectively the hospitality sector, travel, entertainment, airlines, restaurants. On the other hand, there will be a lot of strength in sectors like grocery, distribution, healthcare, home improvement, and how those net out will remain to be seen. But there will be a lot of positive performance through this as well.
So, and obviously, to your point, there's some uncertainty about how long we're going to see supports in place. What about inside the bank? I mean, what are you telling employees? I know banks are making all kinds of arrangements about how your own business will change. How big a change are we looking at in terms of just your operations?
Yeah, well, we sort of think about it in phases, Amanda. Originally, we were in a phase to protect and mobilize the bank. We've talked about this before as we got everybody in a position to be able to continue to serve their clients from wherever they are. I'm standing in one of our branches right now alongside effectively 9,000 of my colleagues who never went home and been serving clients all the way through. And now we're thinking about how we adapt to a new normal and how we move to a new normal. And some of that will be very different. And it'll be very different for a longer period of time, particularly those who are serving customers from home. And I expect that to occur over the course of the next year, or perhaps 2 years, and we'll have a blend of how we end up serving our people. But at the end of the day, we haven't changed our priorities. Our priorities are the same. We're protecting our employees. We're trying to look out for our clients, and we manage our client relationships as a through-the-cycle lender as far as the credit risks are concerned. So it'll be an interesting period of time here, but it really is something that I think the system, broadly speaking, has adapted to very well.
You know, when I think about you're standing there in First Canadian Place in downtown Toronto, many of those buildings will stay, if not untenanted, at least much fewer people down there for a long, long time. I think about the food courts and the people you and I both know who work down there.
Yeah.
We've met them, we come to know them. Many of them are super hardworking small business people whose life savings are in those businesses, and they are just absolutely hopelessly devastated here, and they didn't have a lot of cushion. Can banks do anything, change their thinking around supporting businesses like that? There's not just deferrals, but just a real rethink about what happens to debt gone wrong so that we don't have a whole host of people who just have no shot.
Yeah, well, one of the things we can do is give those people our business, first of all. So personally, I was down giving them all my business in the last couple of days. But more broadly, there's only so much I can do all by myself. More broadly, I think that the solution has got to involve more equity in the system, because there's only so much debt that can be taken on. And some of the programs have been incredibly successful where there's a forgiveness rate to that debt, and there's an ability to take on low interest capital at a forgivable portion. Where that doesn't exist, and for folks who don't have that, I think there's going to be a recycling effectively of ownership over time, and there's a requirement for equity investment. Banks aren't particularly good at that, but there are parts of the ecosystem that are. And I think that over time, as we see reopenings occur, by the way, in these buildings that you talk about and you think about the food courts, the biggest problem is the elevators. We've got a lot of employees who want to come back to work, but they think of the queue that will be untenable if they have to have 2 or 3 people in an elevator that typically has 22 people in it at 7:30 in the morning. So those people don't come back very quickly. But I got to tell you, even in the last 2 or 3 days, I've seen an increase in foot traffic to these particular businesses that you're talking about. I think that plus incremental cushion as time goes on from a financial equity injection is what's going to be required.
You know, Darryl, even before this pandemic, you and I talked about how a business like yours is looking to the future and looking at the jobs that may not be necessary down the road. How much of that goes on now? I mean, banks obviously are huge employers, but you're also technology companies, and there's a lot that gets done through technology. Are you thinking about layoffs now, and could they be sizable in number?
No, we're not, Amanda. What we've said is that we had a program that was in flight prior to the pandemic coming along. We put that particular program on hold for a period of time. We may finish off that program at a particular time, but nothing to do with the pandemic itself. In fact, we've been pretty clear that we will not have any job losses related to COVID. I think as you stretch the timeline out even further, you will continue to see exactly what we all thought about in our industry and in other industries with our clients before, which is a recycling of talent. There'll be more requirement for digital talent, and I think that there'll be nothing that'll change there. In fact, it might accelerate because, as we know, crises tend to accelerate existing trends.
And one of those trends that is relatively new, but I know, like any CEO, you've been reflecting on this, is the diversity question. It's something that I think Canada's banks have been grappling with mixed success, right, Darryl? I mean, you've got a hugely diverse workforce, not a very diverse senior management level. What's the do you have a new take on that, or what do you do to address that?
Yeah, well, I think anybody who doesn't have a new take on that hasn't been paying attention in the last 3 or 4 weeks. So the answer is for sure yes. And the only answer to circumstances like this and environments like this is to step in and lead in more. When I look at our own bank, you mentioned our diversity position, Amanda. We've got some things that we're really proud of, and we've got other places where we've got a lot of work to do. In Canada, 37% of our senior managers, in fact, are minorities. 41% of our senior managers are women. But at the same time, in the very top box, you don't see that exist for visible minorities. So I think over time, I go back to 1981 as I stand in this building, 91, pardon me, where our bank was the bank that tabled the white paper on the advancement of women in the workplace. And at the time we were at 9%, and here I am at 41%. So I come to this with the recognition that there's way, way, way more to do, but there's also a lot of momentum, and we have blueprints, and we've got a lot of hope, and we've got a great group of people. I've got 25, in fact, of my senior leaders in our LCID committee who have co-chairs who are accountable to me, who spend time talking about this every day. And we've had amazing discussions, I got to tell you, over the last couple of weeks. If we had more time, I'd take you through all of them. But I come to this with a view that we've got a lot to do, but there's a lot of momentum and a lot of hope.
And I mean, you've got a sizable U.S. business. I know those conversations are definitely happening there too. On the U.S. front, you're also a kind of a frontline face of how government aid is being received and how the world looks. What's your perception of how the U.S. market is going to fare?
Do you mean relative to Canada, Amanda?
Sure. Well, I just mean in terms of the economic recovery there. Will it be? Are you feeling confident about the prospects for businesses there?
Yeah, I mean, it really depends. I think, by the way, when I said we'd be down 5 or 6 in Canada, up 5 or 6 the year after, I think it'll be similar in the U.S. So I think the trend is the same on both sides of the border. How companies will fare will depend really on the pace of reopening relative to the waves that we're seeing of infection increases, which I think right now is a little concerning. It's concerning to our people. It's concerning to our clients. If you asked me that question 2 weeks ago, I would have told you that there was a lot of optimism in our mid-market clients in the United States. I think there's still a lot of optimism today, but it's colored a little bit with the concern on the rate of infections that we're seeing, particularly in those big southern U.S. states. And here, I think that the pace of reopening relative to the healthcare concerns is what we've got to watch carefully. By and large, what we're seeing is our clients have been conservative. They're reopening. They've got optimism, but they're keeping buffers of cash. So we've actually seen rapid decline in the draws on credit lines. We've seen build up in cash balances, which I think is a very natural behavior that you might expect as people have an uncertain view, though slightly positive, on what the next 6 to 12 to 18 months might look like.
Darryl, it is really great to get your perspective. We appreciate your time. Darryl White is the CEO of Bank of Montreal. And